G'day, thanks for watching. Let's look at the S&P. The last time we were looking at the S&P, there was a situation with this boxed X, which means that there's a low that is lower than the starting low of the 20-day cycle and the ending low of the 20-day cycle as this is phased at this point in time. And I chose the low that is labeled with this large arrow as the low because it was in the center of the 20-day low zone, and that was the 24th of February. Let's bring in some data. One possibility is that this 20-day low has just occurred. So let's pick this up and put it here and see what it looks like. Now, that is outside the 20-day low zone, but late in a downtrend is what we often see. These lows have a tendency to come late in a downtrend. Now let's just test this, update cycles. If we look down here, that 20-day cycle is 26 days long. That is quite long. So we have a situation where there's a possible low here, if this turns out to be a low, on the 3rd of March. That's after the 20-day low zone, and the alternative is before the 20-day low zone, back on the 17th of February. So there's some uncertainty as to just where this 20-day low should be located. At this point in time, I'm going with the 3rd of March. I'm anticipating that given the very long tail or long wick on this candle, that it probably will be some sort of a low. Time will tell. The thing that matters is that price is approaching the 20-week low zone. Now, this 20-week low zone has been shifted based on the relocation of the 20-day low phasing to the 3rd of March. And so the overlap now has shifted, and that's a very narrow window. Let's check to see exactly what it is. That's the equinox. That's the 20th, and that's the 21st. As more data comes in, this might all shift. Okay, thanks for watching.